Hello again, and welcome to our look at the upcoming October 21st trading session for Tuesday. I have the economic calendar out as per usual, and really at this point in time, we don't see a whole lot in the beginning of the session, really until we get to America, which has existing home sales anticipated to come out at 5.10 million for the month of September, and that of course can move the stock markets in America. So because of that, we will be looking at them. When we look at the rest of the economic calendar, we really don't see much in the way of excitement until we get down to the Australian CPI numbers, quarter over quarter, anticipated to be positive by 0.4%. Beyond that, we think it'll be basically a technically driven day. Looking at the Australian dollar, you can see that the CPI number could perhaps finally get us a signal to get out of this consolidation area, but really at this point in time, between about 89 and 0.8650, we feel that the market, any knee-jerk reaction, you could fade it in one direction or the other. So if we rise here based upon a CPI number, unless of course it's an absolutely massive blowout, we feel that buying puts the closer we get to the top might be the way to go. And then of course it is possible to do vice versa, but we would say this: if we make a break down towards the 0.8650 level, do keep in mind that it is with the overall downtrend, and we do believe that the market will eventually hit the 0.85 level. So we really aren't as enticed by buying calls at lower levels. We actually prefer to buy puts on rallies. Looking at the FTSE, you can see that we fell a little bit during the session here on Monday, but really not significantly so, and we still believe that the longer-term chart showing signs of support down here suggests that the FTSE is oversold and we should continue to go higher. Therefore, we're looking for supportive candles on lower time frames, for example on this hourly chart, in order to start buying calls. We believe that a break above 6,400 really sends this market going much higher and would lead to longer-term call buying opportunities as well. Looking at the euro dollar, you can see that we have risen a bit during the session on Monday, but really we still have to worry about the same area that we've had to think about for some time, between 1.28 and 1.30. Any resistive looking candles in this area has us buying puts, as we believe it would go with the longer term downtrend that we have most definitely seen in this market recently. And finally, at the S&P 500, we can see that we keep banging up against the 1900 level. So it's pretty easy for us. At 1900, if we get above there, we believe that buying calls will be the way to go, because it would be a significant breakout. Now, on the other hand, it does look a bit supported below. So really on pullbacks, perhaps supportive shorter-term candles might offer shorter-term call buying opportunities, as we believe that the market has essentially bottomed out for the time being. And with that, we have looked at the Tuesday, October 21st trading session.